Jay, let me go to you first. And as we look at this day and sort of what's happened, we saw some muted demand ahead of the IPO. And it is very, very rare that you see an IPO this anticipated and this size, particularly since the financial crisis, trade like this on its first day. So is this a product of what we're seeing in the markets right now? Or is this because it's a reflection of the whole ride-sharing industry?
I think it's partly the ride-sharing industry that people have had a lot of concerns, and the growing concerns about, as was just said, when will Uber become profitable? And certainly the decline in the stock market and the decline in Lyft's price didn't help the shares either.
Paul, what do you think when you hear Uber or Lyft talking about potentially peak losses? Is there even enough information to know that? I mean, they are engaged in a fierce competition, North America, but Uber around the globe. So is there any way they'd even be able to put a timeline on that? Do you have a timeline of when you think they might become profitable, or even how they get there?
You know what? The key with these companies is not the ride-sharing business at all. It's what they do with their moonshot investments, and do they end up supplementing their core business with autonomous vehicles. And maybe they have a chance to become profitable. But the ride-sharing business in and of itself, I don't care if they say losses will peak this year or not. I don't know if this is a business that short, intermediate, or even long-term is financially viable.
Yeah, peace is at hand, as Henry Kissinger once said. Jay, you've done some studies on how IPOs perform when they've had the kind of day that Uber's had right now. What are you expecting down the road here?
Well, on average, IPOs that start trading flat or down on the first day have been slight disappointments over the next 6 months. Now, this is what happens on average. The average return has only been 1.1% from the close of the first day to 6 months later. But there are obvious exceptions, and that doesn't tell us anything about the long run. Facebook did very poorly in its first 6 months and then went on a tear.
Paul, what would you pay for Uber?
I think that Uber and Lyft should be valued at no more than 6 times sales calculated on a trailing 12-month basis. So both of those stocks, to get me interested, and this would even be a stretch, would have to each drop about $10 per share from here.
Jay, what do you think the divergence is between how the private market saw this company, and they really looked at the total addressable market, which Uber and Lyft are trying to pitch investors now, but the public markets just don't seem to buy it. So about the timing as well, what are the public markets missing that the private markets might have valued so highly?
Well, a couple of negatives have come along since the recent private market valuations. In particular, Uber was doing great in Brazil, and then Diddy decided to move into Brazil and start a price war. So that's one of the things that has concerned investors in terms of the losses in the short run. But I agree with the statement that the short-run losses aren't all that important.
I don't know if we lost
I think we
Jay
just
there.
lost him.
Paul, we'll just give you the last word because I thought what you said was pretty provocative. So both Uber and Lyft would have to drop $10 a share for you to get interested?
You're not giving any goodwill premium anywhere?
No, and I say frankly that at 6 times sales, trailing 12 months, that might even be a stretch. And so the way I look at this is you have a private company. There is no urgency to buy any company in this industry today. Let's see how it pans out. Really, I would just watch and maybe nibble $10 lower on each of these stocks. But again, it would be a small and speculative position in a portfolio.